to watch out for in today's trade. But with that, let's kickstart the coverage of our big global stories. And the big headline that market participants will be eyeing this morning is the Federal Reserve's officials inch closer to a long-awaited September rate cut after a vast majority of members said that such an action was likely. The minutes even showed some policymakers would have been willing to reduce borrowing costs at last month's gathering. The policy-setting FOMC left its benchmark interest rate unchanged in the 5.25 to 5.5% range on the 31st of July, but opened the door to a cut at the September meeting. They also noted many officials viewed the stance of rates to be restrictive, and a few participants contended that amid an ongoing cooling in inflationary pressures, no change in rates would mean that the monetary policy would increase the drag on economic activity. The minutes also showed that a dwindling camp of policymakers feared a premature easing in monetary policy could restart inflation.
Moving on then, lots of debate on how much signal to take from the 818,000 downward revision to US payrolls, the largest since 2009. Is it signaling a recession? A notably weaker than expected labour market print showing that employers added about 174,000 jobs per month, down from the previously reported 242,000, marking a 28% decrease. The adjustment represents roughly 68,000 fewer jobs each month, the largest downward revision since 2009.
Alright, well, let's shift focus and talk about China, because the Chinese government hits out at the European Union over tariffs on EV imports. This after the bloc lowered duties on several major EV makers, including Tesla. This time yesterday we told you about this, and now there's been developments on this front. Chinese officials were out of the view that EU's probe into subsidies for its EV industries have come to preset conclusions, adding that the bloc is promoting unfair competition. A Chinese Commerce Ministry spokesperson said that the country will take necessary steps to resolutely defend the legitimate rights and interests of Chinese companies.
Moving on then, and let's keep it going with EVs. Global auto major Ford has scrapped a planned 3-row EV SUV. Not just that, the company has pushed back a new electric version of its best-selling pickup, the F-150. The latest delay by the US automaker as it focuses on cutting costs to stimulate demand. Ford, General Motors, as well as other car makers have delayed or cancelled new electric models to avoid spending heavily on vehicles that consumers are not buying as quickly as anticipated. Now, the company has instead decided investment into hybrid vehicles on the back of surging sales as well.
If you like this video, then like, share and subscribe to ET Now.